Hello there, this is James, and you're about to watch the latest episode of our Primus Live webinar series. Now, we're about to start in roughly about 3 minutes. I'm excited. I hope you're excited too, and I'll see you soon. Hello there, this is James, and you're watching the latest episode of our Primus Live webinar series. Now, before I introduce my very special co-host and obviously talk about the open conversation of the topic of the day, remember these little live broadcasts are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let me introduce you to my co-host. He doesn't really need an introduction because you know her already. Her name is Kaia, and she's our head of investment research here at FXPRIMUS. Now, she has worked as a portfolio and investment manager with exposure to both public and private markets. Before FXPRIMUS was lucky to get her, she was a senior investment associate at a hedge fund in Singapore and a vice president in Bank of America, Merrill Lynch. Let's welcome Kaia.
James, hi, how are you? Glad to be here with you again.
I'm very well, thank you, my darling. And as always, you looking absolutely dashing.
Thank you so much. I'm going for the black today, just for the sake of, maybe being more synchronized with you, but I think you're wearing blue.
I'm wearing my little blue, blazer today, but my handkerchief, my red, is matching your lipstick. So there we go.
Exactly.
So we are sort of
Coordinated
coordinating a little bit. But how's things? How's your week been?
James, week has been good. This week is particularly interesting because we're seeing a bit of volatility in the markets. Those who monitor equity markets are seeing a bit of pullback in S&P and NASDAQ, which is always interesting. I think in terms of economic data front, our highlight of the week is the ECB meeting taking place tomorrow.
Yes, that's the one. That's the thing for this week. Obviously, we have the FOMC next week, but this week is all about the ECB. Now, before we obviously get on to our open conversation of the topic of the day, which is trading styles, should we have a brief update what's happening in the market over the last couple of trading sessions?
Let's just go through. I mean, last time we met, I think, was early April, and to be fair, we have had a couple of positive releases since then. We have seen very positive number in the US from the retail sales. We've seen a pop of 9.8%. We have seen very positive non-farm payroll, although that actually may have been discussed during our last webinar.
Yeah, it happened like, just around the time we did the last one, yeah.
Yes, I think you are right on that. But in general, we are seeing quite a lot of positive fundamental data coming from the US. However, it seems to me that a lot of it is driven by the stimulus. A lot of it is driven by the sort of reopening in the US. Unfortunately, now that we have over the hump with the stimulus payments directly to the individuals, we really need to start seeing the growth also in the production side of the economy in Europe as well as in the States.
Absolutely. I mean, we talk about this on a fair few times. Obviously, like I said, you rightfully said that we have seen some very sort of positive data from the United States more recently, like you mentioned the retail sales, which again is a good sign that a couple of months back we were talking about this, that the Joe Public, so to speak, was saving money, not spending their money, and we need them to spend their money. So obviously a positive sign in the retail sales shows that they are actually spending their money, especially the stimulus package or their stimulus payment, which they're getting, which is a good sign. But like you rightfully said, isn't it in some ways a little bit of a false economy? We're basing it on this payment, and that in reality things may not be just that rosy.
I think you are spot on. And if you look at, let's say, retail spending trends, clearly we can't compare year-on-year basis, because last year, same time, it was just absolute disaster in terms of, all economic data. But if you look at, let's say, quarter-on-quarter basis, you really see the sort of drive into those sectors that are more impacted, I would say, by stimulus. So, for instance, we saw 23% growth in hobby sectors, let's call it bookstores and music and all these type of things. So I doubt that people have gotten that much more interested in music or whatever recreational side of it. I think it's just people spending their money, as you rightfully said. But savings rate is still high. Savings rate is still hovering around 13.6%. That's as of February. Granted, we don't have the latest data. But the Fed survey says that 30% is still put to the side. People want to be prepared for the rainy days because everybody has gotten a bit of trauma, I shall say, seeing such large scale of redundancies and bankruptcies as we saw in 2020. So I think on the retail side, maybe we'll carry that momentum over May and June. But for the second half of 2021, growth needs to emerge from other sectors of the economy. And maybe that's when the infrastructure bill gets approved, hopefully.
Fingers crossed.
Fingers crossed.
Exactly. Okay, so what's been the major sort of assets we've been trying to keep an eye on over the last couple of trading sessions? Anything in particular which has caught your eye and maybe worth discussing?
I think given we are an FX broker, we have to talk about US dollar. So US dollar, everybody was sort of holding their breath that, maybe the dollar is sort of trending higher again. We're going to have another upswing. But I would say since early April, it's just been downtrend. And I'm looking at the US dollar index measured as DXY. I'm going to pull a chart up as well for DXY whilst I am sharing my screen. There you go. Should pop up any minute now. So this is, as I mentioned, DXY. Looking at the daily chart, time frame we have here, let's say, is from December until year to date. A few indicators I always use on my charts are Bollinger Bands, which are those sort of grayish lines. And I use moving averages, and I enjoy my rainbow colors. So the red is 8-day moving average, orange is 21, yellow 34, 50 is green, 100 is blue, and the thick purple one is 200. And we started seeing this sort of momentum up, I would say February, maybe even early January, until 31st of March. And this is the day when Joe Biden actually had his speech about the infrastructure spending, and market just sort of started trending lower. I'm not going to say that's the reason why dollar has crashed. There are many different theories, from the perspective that short squeeze basically run to an end. People started shorting again, from the perspective that, given DXY is predominantly euro weighted, 56% of it is euro, maybe the market is just pricing in potential euro recovery because Europe has, I'm not going to say they have been successful in their vaccination, but it's getting better. It's getting better. Yeah. So potentially markets are pricing in that.
Do you think, again, like you say, you mentioned that the downturn started after Joe Biden mentioned his infrastructure spending. Do you also maybe think that was a case of buy the rumor, sell the fact? The market was sort of expecting that from January onwards, him to come in, and maybe that's one of his election pledges. And then as soon as he confirmed that, that's when maybe the market's gone, right, yeah, it's happening. Buy the rumor, sell the fact. Let's start shorting the greenback.
I think you are spot on, because again, something we have discussed before is that a lot of the expectation and euphoria has been priced into the markets. I think, equity markets in particular have been priced to perfection. Very little room for any errors. We keep getting these revised earnings expectations, higher and higher. How high can we, possibly go? And I mean, at this point, I don't have the latest, but I think forward-looking PE is already like 20, 21, 22 something versus historical 16, I think. So I think that, maybe we got a bit too ahead of ourselves. But, having said that, looking at the dollar here, I mean, there are a few things, a few conclusions we can draw. So first of all, we see dollar is back 200-day moving average. So we could debate that, it's again bear territory. We see price at the moment below 50-day moving average, which is the green line here. Again, we could see this as a sign as bear market. At the same time, we still see 200-day moving average coming lower. We still see 50-day moving average gradually going higher. So at least the direction of moving averages is right. It's good, I would say. Then something I picked up from the chart, I don't know if you agree, but I think there's a potential head and shoulders pattern maybe even coming here. I see this pink line marking the neckline here. This being the right shoulder, we see the head. We'll see if there's another shoulder forming. Yeah. But if that is the case, then I think we could possibly test again the lows of maybe 89 that we saw early in January. And again, talking about fundamentals, you see narrative on both sides, why the dollar should be going higher, why the dollar should be lower. So I don't have any particular view on that, because these days it's not the market forces that are pricing FX. I think it's predominantly central banks that are doing it. What do you think?
No, I guess I can see your point about the potential head and shoulders. We need it to pop up a little bit higher, though, to confirm that pattern. Yeah. But if indeed, I can see that neckline is broken, then you can really see it coming back down to this. What was it? What level was it? When was it back? I can't quite see the chart. The data.
89-ish, I think, was the swing low on the 6th of January. And 6th of January was the day when the Georgia runoffs actually were sort of happening. So that was the day when everything was great again in the world. So,
we're all happy.
So who knows? We're all happy again. Yeah, but who knows? I mean, I see stochastic shows that we are oversold. But again, stochastics can remain oversold, overbought for a long time if there's really strong momentum.
True.
So we shall see.
But say the stochastics, if we did want to see the second shoulder forming, then it would be oversold at this point, because we obviously needed to jump back up again before obviously breaking the neckline and then doing that. So that would, I think I would agree there could be something there.
I agree. And, ADX is also something that may confirm that sort of momentum, because ADX is currently 24. Fine, I always say 25 is the line in the sand, but, really anything above 20 sort of shows there is energy in the momentum. And it can go really both ways. It can go up and down. So remains to be seen what's going to happen with US dollar. But when we talk about markets and asset classes, US dollar is always the cornerstone. It drives pretty much everything in the world, meaning it drives emerging market FX, emerging market credit, and by extension, their equities. It drives US dollar equities. So, once you get right the dollar movement, I think you can place a lot of the other puzzle pieces into their places as well.
Well, it's the world's biggest reserve currency, the greenback. So it's always going to be, it's the key, the key player, isn't it? Which everybody, whatever the US dollar is doing, then you can sort of see where the other currencies may go one way or another. What do you think about the euro? Has been quite interesting, because you rightfully said, you mentioned earlier on, but obviously the biggest event this week is happening tomorrow, which is the ECB base rate announcement, and obviously press conference following on from that. We're around if I pull it up on my chart so I can see it as well, we're around the 120 mark again, aren't we?
We are literally 120 at this point. So yeah, I mean, it's interesting with euro, right? So everybody became extremely bearish at some point, jumped again, until again this early April when euro started trending higher. So with euro, it's similar. I mean, first of all, the ECB meeting is going to be similar to the Fed meeting. Nobody's expecting any news in terms of the interest rate decision, but it's more the language and sort of the sentiment, the dovish versus the hawkish. What is Lagarde going to tell us? But what we are seeing now is that euro area has seen record bond issuance during Q1 in terms of size as well as in terms of maturities. Which means that the maturity has pushed out. There's 15% of issuance was more than 25 years and 6% more than 30 years. So the moment we have more issuance on the long end, the yields are expected to go slightly higher on the long side. And I'm assuming the expectation is that will steepen the yield curve. And hopefully, capital is going to flow into the euro area again. So the thesis is that that issuance has pushed euro higher as well, from the perspective that we're going to see economic activity recovering, and investors have become hopeful again. We'll see.
And you said earlier on as well that obviously their vaccination is not brilliant compared to, say, the UK, Israel, the United States. However, there is signs that it is improving. So again, there is a little bit of optimism on that they can follow through with this. So it can start to return to more like business as usual.
Yes, and I don't know if you picked up, but just today I saw announcement that Johnson & Johnson vaccine is going to be administered in the euro area. Honestly, being in Europe, we can't afford any more delays. We really need to start, getting slightly better in terms of vaccinating, and also maybe approving different vaccines, because I think Sputnik is also being reviewed currently by whatever authority at European level. So if we want to resume any normality during summer, we have to act fast. Unfortunately, we are seeing a lot of variants that may not may be immune to the vaccine, or what's a good way to say that, won't be able to protect people. So we'll see. I mean, the Indian strain is the most concerning one, I suppose.
Yeah, the Indian variant is, I think, what's concerning quite a few governments at the moment. But let's see. Well, like I say, I mean, there is an optimism that we're on our way of getting on top of things. So let's keep with that optimism before we start going. Another variant comes along and we're back in the back in trouble again. Is there any? Sorry.
Something I wanted to say is that what we now have to take into consideration when we talk about asset prices is always the vaccination and the coronavirus spread. So, for instance, last few sessions, I should say maybe last few weeks, oil prices actually had recovered to $63 at some point at the back of very low supplies, in the US as well as on the global scale. And we also saw better than expected outlook from OPEC. But the moment you started seeing news from Asia, such as Japan going into lockdown, Thailand struggling again with new wave, oil is back to 61 again. So it's interesting to see. I mean, I would like to see somebody building a model that talks about coronavirus news and oil price movement. I think there's a pretty strong correlation between these two.
Yeah, like I say, you can you can actually say that, can't you? Actually, it's the new indicator.
It's a new indicator.
COVID news. You know, so that's that. You know, maybe we start putting it on our financial calendar.
But you know, I'm pretty sure it's actually not that difficult to build now that you think about it. You know, even if you look at Google trending words, you know, there have been models built around that. You know, see what term is trending in Google. I'm sure that, you know, if there's any frequency in terms of Googling COVID or vaccine or something, you can place that into the chart and actually maybe predict asset prices.
Yeah. Yeah. Well, you know, we all know we've seen it for ourselves. Remember that happy November when we had that initial news, how the market reacted so dramatically into that was
a good month, James. I remember the optimism. I remember the optimism. It was really, really good. It felt great, right? It felt like there's a light.
it was light at the end of the tunnel. It was just before Christmas. So it was like an early Christmas present. We all started feeling better about ourselves. I mean, Cyprus, unfortunately, we went into lockdown around Christmas, so we couldn't go out to celebrate. But anyway, you know, it did give us that little bit of hope. And it sort of, in many ways, has sort of continued that way. So let's get on to our open conversation on the topic of the day, which, of course, is trading styles.
Types of trading, yes. So we want to focus today on the sort of styles of trading from the perspective if one is a momentum trader or if one is a contrarian trader. We have discussed the time frame analysis during one of our lives a few months ago, who knows? You know, time is very subjective thing these days. I think it may have been in December. But today we want to talk about how one would trade charts if they were a momentum trader or contrarian trader. And James, you know, contrarian trader can operate in multiple ways, right? And well, technically can also momentum trader, but as a contrarian trader, what you can do is that you can actually look at the charts, pick up certain indicators and trade based on that. Or as a contrarian trader, what you can also do, you can look at economic data. Let's say US inflation is a great example. Everybody was expecting a massive pop in inflation in CPI 2 weeks ago. It wasn't really a big pop. It was a tiny pop. But as a contrarian, let's say one might have completely different view on inflation. Let's give an example. I think the expectation was 2.5% year-on-year basis. Let's say James is a contrarian. James is like, nah, it's going to be 5%. So if you have such strong views about macro events, completely opposite to the consensus, that is contrarian style, and you can trade based on that view.
Yeah. I mean, in a nutshell, the two different trading styles are very different. Whereas momentum ties to buy stocks with recent history of good performance, you know, who are performing, and sell stocks with recent history of bad performance. Whereas contrary strategy, they look for the awful, really bad stocks and buy, and really good stocks or assets and sell. So it's going completely opposite to where the current maybe mood is going. So they're very different in many ways. Can you be both though? Do you think a trader could be both?
I think you can. Yeah. And personally, I think in a way I am both. Meaning my dominant style for sure is momentum trader. I'll walk you through my process a bit later. However, every now and then I do take contrarian views. So a good example, I'm not going to pull that chart in front of you, but I'm just going to pull up gold. So if you look at gold, let's say gold has been trending lower. Okay, Mike put that chart up for us. But let's say if you were a momentum trader and you look at this time frame here, you know, gold really started trending lower. The moving averages are stacked in a bearish fashion ever since whenever the death cross formed, let's say the 15th of February 2021. And as a momentum trader, you would always short, or you would buy puts, or, you know, whatever, but you would be bearish on gold. However, I did follow that trade, so that was actually a pretty good trade. But I became a contrarian trader, I would say late February. I was a bit too early with my trade, so it didn't work out particularly well for me. But nevertheless, point being is that once a contrarian finds that maybe we have maybe the price has gotten a bit too low or a bit too high, I'm going to take the opposite view. And you can even use charts for that. But let me just think if we're going to use gold. Do you have any other suggestions? Shall we use gold? Shall we use GBP USD? Is also an interesting one. What would you prefer?
Let's have a look at the cable and look at gold, because I'm saying, obviously, I'm a gold trader. So
you're a gold trader. That's why I like to use gold, because we both like gold.
It's lovely and shiny.
It's lovely. That's why I have the earrings on. Also a big fan of gold.
No, I've always been a big fan. It's the oldest asset I've ever, it's the oldest asset I've ever had a relationship with. So this is why I always have a personal thing with it. But I can see what you mean. I mean, if you looked at it, if we go, I'm looking at my daily chart, and you can see around about, what was it, December time? Okay, yes. It started, obviously went on a downward momentum. That's obviously where the momentum traders or momentum strategy will jump in. I only become a contrarian. You say it for me. I can't.
Contrarian.
Thank you. What Kaia said. I only became that when I started watching gold, because at this point the momentum was a bearish market for gold round the 1703, so $1,703 level, because that's where I was watching the Fenerbahce at 61.8. So that's where I then changed. Yeah, so round about that, just under. That's where I started to change my feeling towards it. So I waited till it got to that point, and then my stubbornness, I went, no, it's going to, this is the chance where it could start retracing back. And that's where I changed my strategy on that. So there is room for being both, and you can see it both on the charts, both trading strategies. As long as you have sort of like a clear head on that. The only thing what I will say with with the latter side of trading is always, of course, be control of your risk element of that as well, because I could get it wrong, even though I was stubborn enough to be convinced, and it did bounce off that level. Even though I was stubborn enough to keep it going, I could have still got it wrong, and it could have made me suffer.
Agreed. I mean, first of all, there's nothing certain in trading anyway. We always deal with sort of a probabilities, probability sort of scale. With a momentum trader, I believe the benefit, in my opinion, is that you are still following a trend, meaning you don't even have to. Yes, you have to time, meaning that you have to have a good entry. Otherwise, it's very hard to be profitable if it's a poor entry, especially if you trade, let's say, options that have theta aspect to it, or the time decay. But with contrarian, you can be wrong. You can be right for a much. What's the expression I'm trying to find here? The markets can be wrong longer than you remain solvent. So point being, you can just wait and wait and wait for the reversal, and it may not happen, until you are willing to stay in that position. But I find, for me, the momentum is a bit easier. I can sleep at night because I know that the probabilities are in my favor. If I follow my own trading logic, if I look at the moving averages, if my entry is well timed, looking at RSI and looking at stochastics. So what I want to see is all these indicators sort of being aligned and supporting the entry. I set up my profit target and I exit only, once I reach my profit or my stop loss.
Very much so. There's the old saying, of course, this is what happens when you're a momentum trader. The trend is your friend.
Trend is your friend.
Trend is your friend. So, again, it's an old saying. I didn't come up with it. I wish I did. I could charge royalties for it. But that's a very old trading statement, which obviously the trend is your friend. And like I say, momentum, you're going with the trend, because it will often take something in particular to reverse that trend or something to happen. Whereas contrarian traders, I still can't say the word. I could say it earlier on. I practiced before we came on air. We need 10 times together with James, contrarian. But just not there. I just say what Kaia said. With that, I think it's own stubbornness. You have to absolutely have your own convictions on where something's going to go, and you have to stick by it. And that's the thing. We have got a great question here from one of the many wonderful people watching us. And they say, what is the psychological adjustment do we need in order to switch between the two trading styles? What do you think is the psychological adjustment?
Hard to say. For me, again, only my personal perspective I can share here. I find momentum trading being emotionally and psychologically much easier because, again, probabilities are in my favor, but with contrarian views, it can hurt. It can really hurt if you really feel the price is overbought, oversold. It should bounce back from here, but it just doesn't, and it just doesn't feel good at all. And with contrarian trades, like I said, it's the time is against you effectively. Whereas with momentum, I think you can it's like surfing. You can just go on the wave, and until the majority sort of changes their mind, and the wave is over. But psychologically, I my personal opinion that contrarian traders have to be, what's a good word? Maybe able to switch off their emotions much more. They have to really have a conviction. They have to stick to it, and they have to be comfortable with the fact that they may be losing money. But when you talk about famous traders, you have both sides. You have contrarians and you have momentum traders. I believe momentum traders sort of get more real estate in newspaper and in media. All the Paul Tudor Joneses, they're predominantly momentum traders. Whereas, let's say, George Soros is a contrarian. So he takes views that are mostly against the market, and hence, breaking the Bank of England, which is one of the famous, market events of all times. Yes. So you really have to be comfortable with being in that position, and you have to have the capital to keep that position.
Yeah. I mean, I think there's another real famous story which was made of. It's a great book. And the book is a lot better than the movie, but the movie did very, very well. And that was obviously the Big Short, wasn't it? Which, again, we're talking about a number of contrarian traders who in their believed the mortgage market was about to collapse.
Yes.
And for ages and ages and ages, they held on to their positions, the credit default swaps, and the market was going completely against where they were thinking it was going. And they have to hold on to it. And eventually, they rightfully got it right. And it did go in their favor, did go in the direction they expected it to be. So, that's another a true case of that type of trading style. I think going on to that, I think momentum traders is, you rightly said, it is slightly, again, nothing is easy in trading. So it's not maybe the right word to use, but it is slightly more adjustable way of trading because you're just going with the market. And at the end of the day, no one is bigger than the market itself. So you're just going with where the market is heading. Where contrarian traders, you have to be absolutely convinced and stubborn and done your research to really think, yes, this is where the market is going to reverse or change its direction. And as you rightfully said, you can also at the same time be in a position to maybe hold that position for longer until you're proven to to be right. So
I think the great example you're using, by the way, the Great Short, because that particular gentleman sat almost 18 months with that particular bet. And given that he was a fund manager, meaning he was managing outside investors' capital, he actually had to lock his fund. Investors were like, what the hell are you talking about, man? Your positions are losing money. We want our money back. He said, no, you're not going to get your money back. He actually restricted the fund until he was right. So it was, I can imagine, psychologically very uncomfortable.
He stuck to his guns. Well, I'm trying to remember his name. Is Michael?
Michael something. Michael with a B. I remember. And actually, he has been on media even with this GameStop topic, and recently. So he's brilliant guy. Able to see really.
He's a bit of a maverick.
Yeah.
And I remember reading. I'm really embarrassed. I can't remember his name because I read a lot about this guy. This guy I admire a lot. But you're right. He locked the fund because he was convinced he was right. And despite all the phone calls, all the threats, in the end, his fund ended up returning a huge return on investment, profit. And he was absolutely spot on. And he actually invented the credit default swaps from Deutsche Bank. This is how clever he was.
He was brilliant. Yeah, he was brilliant.
He actually came up with that. And I remember the part again. I'm digressing a bit, but he bought a load of credit default swaps from Deutsche Bank, and Deutsche Bank said, they were happy to sell it, thinking, what's he used for?
What an idiot, right? Who goes against
what an idiot, what a clown. Hey, happy days. Next day, they did their own analysis and went, can we buy some back? Actually, you might have a point here. You might be onto something. But yeah, anyway, our original point, that type of trading, you really need to be absolutely convinced or really stubborn or committed to your opinion on that, and be prepared that your stubbornness may be wrong. So you make sure you're protected. Do we want to look at another example?
Let's pull up the cable as well. Let's look at GBP USD, because that's a lovely chart. And what I want to show here, actually, maybe it's not even that great of a chart, because talking about trading opportunities. Okay, let's use GBP USD. So I'm just going to walk you through something that a momentum trader might do, and I'm using the indicators I have on my map. Clearly, on my chart, people may not use the same, but maybe it helps with the logic process. So as a momentum trader, let's say if you start looking at the market from early November, you see that clearly there's an upward trend, right? So looking at the moving averages, they are just all aligned. And if moving averages are aligned based on the time frames, it shows that there is a trend in place. But as a trader, it's not about identifying the trend only, it's also finding the entry point. So in a very strong bullish market, the price is very likely to find support near 8-day moving average. And I use exponential because that tracks the price closely. Some people use 5, some people use 10. Again, depends on the person. So price can remain above 8-day moving average or find support that. Personally, I don't like to get an entry from that high point. I like to wait for pullbacks. And you see on December the 9th, 10th, there was actually not a bad pullback when we talked about cable. And the price found support near 34-day moving average. So given that moving averages are aligned, meaning that the trend is in place. And if we look at other indicators, let's say ADX, oh, my chart jumped a bit again. ADX at this point was still around 22, indicating there is energy in the trend. So the trend will prevail despite of the pullback. And looking at stochastic, which is currently at 40 here. Oh, sorry, it's actually, let's say 40. Stochastic also shows that the price is on the lower end of its normal cycle. So that's actually a pretty good indicator for me. Oh, maybe I want to take this trade. RSI, I would say, doesn't confirm the story. But again, depending on the aggressiveness, a trader might take this particular trade because there is a pullback, there is a trade, there is an entry. And, had one taken, let's say, an option trade or even just pure FX trade based on this, it would have been a pretty nice run here. Price basically sprung back up and broke the upper Bollinger Band resistance level. Yeah. So that's a thinking logic of a momentum trader, whereas a contrarian trader, let's say, looks exactly at the same chart, sees, okay, price sort of pulled back, then it sprung up to the upper Bollinger Band resistance. Contrarian trader might take a short position here because price is clearly overbought. We have, exceeded the Bollinger Band, and we see also from the stochastics we are above 80. So probability and likelihood is in favor of the price pulling back to its mean level, which it did. And it's back at the 21-day moving average, and 21-day is the mean on a monthly basis. So that's sort of the thinking process between the two. And again, for the contrarian, some asset classes, some charts, they are more likely to move, between the Bollinger Band and, the moving averages. If one had taken a short position against cable on the 11th of February on the basis that it had exceeded or it had pierced the upper Bollinger Band level, it wouldn't have been very comfortable because the price continued to trade higher and higher and higher and constantly at upper Bollinger Band resistance level. So point being is that as a contrarian, you have to be comfortable that you may be wrong. The same with momentum trader, but for momentum trader, you can not to say calculate probability, but you can at least know the probability are in your favor if you follow the sort of logic or the rules.
I totally agree. Should we see if we have any questions? Do we have any questions from? Let's have a look. Not at the moment.
We'll give everyone a couple of minutes to pop in the questions.
Just give a bit of time.
Yes, a bit of time. Until then, let's see, what do we have scheduled? So on the 28th of April, we have another live training competition. So
excellent.
everybody, yes, it's extremely popular event. Last one we had was in March. Very positive feedback, so encouraging everyone to participate. The rules, the T's and the C's are available on our webpage, and I'm sure they are also on our Instagram. And if I'm not mistaken, I saw them on our Facebook page as well. So please go check them out. And the next live we're going to do is on the 12th of May. We don't have a topic for that, so if you have any ideas, suggestions, please drop us an email. But you know, we will definitely announce the topic within the next couple of weeks.
Brilliant. But the live trading event, that is a major event for FXPRIMUS. It's something we do on a regular basis. Extremely popular. People like it a lot. So bear in mind on that. And on the 12th of May, which is 8 days before my birthday, by the way, just so you know, it's a hint.
Are you a Gemini as well?
Technically. My birthday.
Technically speaking, since we are technical traders, you're technically speaking.
Technically speaking, no, because my birthday's on the 20th of May, which makes me a Taurus.
So I'm a borderline.
And the Gemini starts on the 23rd. So I actually have not that I believe in that stuff, but I actually have the traits of both. So yeah, we got a hi from Somalia, Zambia, and Philippines. So hi everybody, thank you for that.
Hello, thank you for joining.
Thank you for joining, and hi back, and thank you for joining us. But yeah, so 12th is the next Primus Live, and remind the date again for the live trading is the
28th. And those who don't know about the event, so basically we give you money to trade. Whatever you earn, you can keep. It's going to be almost 4-hour event. I don't know the details by heart, but we have multiple rooms. We have it's a global event, so it's not just happening for English speaking. We have last round we had Vietnamese, and we had also Malay speaking room. So it's interesting. It's cool. We get so much positive feedback from that. It's sort of live commentary on the markets. Always huge success. So looking forward to everyone joining.
Fantastic, brilliant. Well, on that note, we have no further questions, but those are the things to look forward to. Kaia, would you like to say goodbye to the good people?
First of all, thank you everyone for joining. Super excited to be here. See you on the 28th, and we'll see you on the 12th of May as well for the next live.
Fantastic. And again, thank you everybody for joining us today. And please keep your questions coming in and your suggestions for topics of areas we like to cover. Don't forget, these little live episodes we do is for your educational purposes only. So please let us know. We're more happy to create something just for you. On that note, do remember these live broadcasts are for educational purposes only, and in no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks of hand before entering any trade. On that note, till next time, every single one of you, trade safe.